India benefits from a less hawkish Fed. For now, RBI can adopt a wait and watch policy. A degree of relief has been achieved regarding fears that the Fed's restrictive monetary policy will negatively impact the US economy's growth. Since the US is one of India's top export partners for goods and services, this is good news for India. As expected, the Federal Reserve Open Market Committee raised the Fed fund rate by 25 basis points in July and resolved to continue reducing its balance sheet. The Fed's statement since June has not changed much, but it continues to emphasize price stability as its top priority, with the future policy actions based on the incoming data. Although the federal chairperson acknowledged that consumption and labor market conditions are encouraging at the post policy press conference, the tone was considered to be very positive. The Federal Reserve staff is also forecasting a significant slowdown in growth but no recession at this point of time. As a result of this meeting, fears about the Fed's restrictive monetary policy have been somewhat allayed. As one of India's top partners for both goods and services exports, this is a good news for India. Moreover, there is convincing evidence that US rate hike cycle is coming to an end. As summarized by the Federal Reserve Board members in June 2023, the peak of the current rate hike cycle may be at 5.6%. Currently, the policy rate is close to this mark. According to the PCE, that is Personal Consumption Expenditure Index, US inflation has declined steadily from 6.8% last July to 3.8% this July, providing some comfort to the Fed. Inflation is still significantly above the Fed's 2% long-term target, but the Fed is still waiting for the full impact of its 525 basis points rate hike since early last year. In the most recent trade-sensitive sectors of the economy, such as housing and investments, the effect of the policy tightening are being felt. Growth may not be in danger too much. The policy rate is expected to decline by 100 basis points in 2024, whereas the European Central Bank at its July policy meeting, however, continued to fight inflation as the consumer price index remained high at 5.5%. Despite increasing the policy rate by 25 basis points, the ECB maintained its restrictive stance. A reversal in the monetary policy stance of the US Fed will provide some relief for the rupee and its external sector. From 112 to 100, the US dollar index has declined considerably since last September. Foreign portfolio inflows have already improved this fiscal year due to a weaker dollar, which relieves pressure on the rupee. The RBI will also have less pressure as the US rate hike cycle tapers off to maintain the spread between Indian and US sovereign yields. Hence, the RBI can adopt a wait and see policy for now, given that the CPI inflation in India is not overly concerning. Hope the information is useful. Thank you very much.